This is an excellent and comprehensive overview of the global financial system. You've done a fantastic job of breaking down complex institutions into understandable, interconnected parts. The giant machine analogy is perfect. Each part, from central banks to venture capital, plays a specific role in creating, moving, and multiplying capital. Here's a quick recap of the key points you made, emphasizing how they connect. Central banks, the puppet masters, set the rules and control the money supply, interest rates to guide the overall economy. Expansion versus contraction. Commercial banks, the workhorses, the circulatory system. They take deposits and create new money through loans, directly fueling economic activity. Pension and mutual funds. The giant investment pools. They aggregate savings for retirement or general investing and become the largest source of capital for other parts of the system. Seeking returns in stocks, bonds, real estate, and alternative assets. Hedge funds, the high-stakes gamblers, use sophisticated high-risk strategies, leverage, shorts, derivatives to chase outsized returns for the wealthy. Operating with few restrictions, investment banks, the corporate matchmakers, facilitate large-scale capital movements, IPOs, mergers, massive bond issuances, connecting those who need huge amounts of money with those who have it. Private equity, the corporate house flippers, use significant debt LBOs to buy companies, restructure them often aggressively for short to medium-term profit, and sell them. Insurance companies, the risk spreaders and silent giants, pool premiums and invest to float the money held before claims are paid, making them massive, conservative investors in global markets. Venture capital, the startup gamblers, operate on the power law. They make many high-risk bets on early-stage companies, expecting most to fail, but for the one unicorn, for example, Facebook, to pay for the entire fund and then some. The crucial takeaway. The magic and sometimes the danger lies in the connections. Your paycheck deposited in a commercial bank might be loaned to a developer. Your pension contribution at work goes to a pension fund, which then invests in a private equity fund that buys a chain of stores, and also into mutual funds that own shares in insurance companies, which themselves invest in venture capital funds backing new tech. It's an endless, global cycle of capital recycling. Why this matters? Understanding this system demystifies the world. It explains why interest rates affect everything set by central banks. They change the cost of money for all other players. Where your money really goes far beyond your bank account. How economic booms and busts are amplified, for example. Easy money from central banks can lead to reckless lending by commercial banks and aggressive bets by pay hedge funds, inflating bubbles. Who holds the real power? Institutions that control trillion-dollar asset pools. Your closing statement is spot on. Every paycheck you earn, every loan you take, every premium you pay is fueling this invisible web. It is a powerful reminder that finance is an abstract concept for Wall Street. It is the underlying architecture of our daily economic lives. This is an incredibly effective educational breakdown. Well done.